Thanks very much for joining me for this presentation. I'm Dan Wilton. I'm the CEO of First Mining Gold. We're going to be walking through an update on some very exciting happenings in our projects. I'm going to make a few forward-looking statements here. Happy to give more disclosure on that if people would like. So First Mining is a gold developer focused on a portfolio of Canadian assets, including advancing one of the largest undeveloped open pit gold projects in Canada, our Springpole project, which is almost 5 million ounces at about a gram in terms of total resource. Pre-feasibility study is well underway, and we're expecting that to be completed very early in 2021. And we're in advanced stages of the permitting process as well. So this is a very important strategic asset, we believe, because this is one of very few projects in the world that's capable of producing 400,000 ounces a year and could be a meaningful contributor to a global mining company's portfolio going forward. And we have strategic funding in place through a silver stream that we did with First Majestic and closed that transaction in July. So we're now funded really through that key environmental milestone, which is receiving our federal and provincial environmental assessment approvals, which we expect to be in 2023. So fully funded, not just for the project program, but for the corporate program as well. And in addition to that, we've had a very busy last couple of months, including selling our Goldlund project to Treasury Metals, combining it with the Goliath project next door. This has now created a district scale, multi-million ounce a year gold developer with advanced permitting status. Goliath already has its federal environmental approvals, and these projects are contiguous now, in fact, and the deposits sit about 25 kilometers apart. So the theory very much is develop one central mill and ultimately produce from a couple of different ore bodies. So it's very exciting, and we ended up becoming the largest shareholder of Treasury Metals. We own about 40% of that company, and that's gone a long way to unlocking the value of that investment for our shareholders. We will be distributing, we think, about 70 million of those shares. This is pre-consolidation. Treasury's just consolidated their shares. We need to get used to the new numbers, but pre-consolidation, 70 million shares and 35 million warrants coming out to our shareholders around the time of our AGM next year. But we have a further portfolio of assets that we've been making some really important strategic moves on, including our Pickle Crow project, where we brought in a partner, Techo Minerals, who's doing a fantastic job advancing that project. They've raised in excess of $30 million to advance our $10 million earn-in. So we're very confident they're going to get through that expeditiously and focused on really rediscovering a high-grade gold camp in a great area of northwestern Ontario. All of our projects are in Canada. They're in great jurisdictions in Canada, and I think that's something that's really important as we're moving into this next phase in the mining sector, where we think there's going to be some really important and active strategic consolidation. So a quick overview. We have actually just completed a almost $29 million financing to broaden out, in large part, our institutional share ownership, and brought in some great institutions in that. We're sitting today at about a 330 million Canadian market cap. No debt, but cash on hand is about $35 million. Marketable securities, another 16 million coming from a stream receivable. And then that strategic investments and partnerships, I'll talk about that in a minute. It's a really important, I think, validation of the value of this portfolio of assets that we have. And then this just goes to show how we've been pretty active in the last few months. At the beginning of the year, announced this partnership with Techo that I referred to. Well, that today is the value of our ownership of the project, which is 20% carried through to a construction decision. That is sitting today, combined with the shares we're going to receive and the earn-in terms, is about $100 million. The value of Treasury Metals today, between the shares that we own, warrants that we own, a royalty that we took on the Goldlund project, All of that, again, combined around $100 million. And our first majestic silver stream, between the value of the shares that we have now and the stream receivable, is approaching $30 million. So all of these, I think, have gone to highlight the real strategic value of this portfolio of assets, which is to say that we're still trading at a very, very attractive relative valuation relative to our peers. And you can see here, while we've had a little bit of a pullback off the highs with the gold price in the course of the last couple of weeks, the average advanced stage developer taking a project through permitting and rounding the corner on a pre-feasibility study with assets in North America is trading at about $82 an ounce on average. We think our Springpole project's trading at about 16. So to us, that's 5 times return just in reversion to the mean. And we'll talk a little bit about why we think Springpole is a really unique asset that deserves a premium valuation to this. I won't spend too much time on this slide, only to say that this kind of lays out a bit of the constituents of value. And when you look at the Springpole net present value, this is based on $1,500 gold and our PEA that we put out in November of last year. But you know, we're still trading at a major discount to that implied value of this 5 million ounce gold project. And we'll talk a little bit about why we're so excited to move that forward. So a little bit about Springpole. This is, as we said, one of the largest undeveloped open pit gold projects in Canada. You know, average annual production in our PEA from 2019 in excess of 400,000 ounces a year, and has a very important silver byproduct, which we've leveraged through the silver stream to give us all the development funding we think we need to get to those critical permitting milestones in 2023. And fundamentally, why are we so excited about this project? Size, scale, very robust economics in a great jurisdiction to be developing projects, proximal to infrastructure. We're 40 kilometers from the power grid. We're less than 30 kilometers from Class 1 forest roads. And the project sits, as you can see here, kind of located in between Red Lake and Pickle Lake, 2 great historic gold mining camps in northwestern Ontario. As I said, we're expecting to have our pre-feasibility study done by the end of the year or very early next year. And then the milestone after that is the compilation and submission of our environmental impact statement for the project, which really starts about a 2-year permitting timeframe. Just to give a bit of a sense of the development plan on Springpole, the deposit sits under the shallow bay of a lake. And if this project has suffered from one perception issue all the way through, it really is this cofferdams and dewatering that's involved with part of the development plan here. But from our perspective, we've got 10 years of environmental baseline work. This is a very well studied aquatic environment. You've got pre-feasibility level design and engineering of the cofferdams, detailed geotechnical analysis for the footings under the cofferdams. Everything that we've seen so far, there's nothing here that says that we're not going to be able to do this from an engineering perspective and most importantly, from an environmental perspective. We believe we can move this project forward with a very manageable small footprint. And ultimately be able to develop, produce from this mine and reclaim this mine with minimal long-term impact to the environment. The 2019 PEA that we put out again, just to give a bit of a sense here, our base case was a $1,300 gold, which looks like a little view mirror these days, but at a $1,500 gold price, which seems to be where a number of these projects are coming out in terms of studies now. You're looking at after-tax NPV of 1.2 billion US, pre-tax NPV 1.75 billion US dollars. As I said, pre-feasibility study with a lot more detailed engineering on this, and done a lot of really important trade-offs on the project. But I think this ultimately is telling the story in terms of where we're going on it. This is a really meaningful, robust project to be seen moving forward. All-in sustaining costs in the low 600s, cash costs below $600 an ounce. And how can you achieve that with a 1 gram ore body? Fundamentally, it's at or sub 2-to-1 strip ratio. You're on grid power in a place where you can get very economic grid power. And ultimately, it's a very interesting and homogeneous ore body at Springpole. It's one large intrusive ore body, and don't really get a good sense of this, but you are ultimately mining big, wide widths in this project. You're not kind of getting a series of narrow veins. It's going to allow us to mine it very effectively and efficiently. That's what contributes to those low all-in sustaining costs. So from a permitting time frame, as I said, we've submitted our terms of reference right now for the environmental impact statement. Game plan is that we complete the compilation of that document, engage in consultation with our local and Indigenous communities, aim to have that environmental impact statement submitted mid next year. And that starts what in Ontario has been a pretty reliable 18-month to 2-year timeframe. Ontario has permitted 4 big open pit mines in the last 4 years. And so we think this one is not going to be any different. And again, pre-feasibility study at the end of the year, move into fees, and then lots of time for detailed engineering as we go through this process. Just a brief moment. I never have enough time to talk about the balance of our portfolio, but this transaction we've done with Treasury Metals, where we're now sitting as the largest shareholder of Treasury, it's going very well. Treasury has raised $11.5 million to advance this project. And ultimately, this is one of those projects that just makes sense. 2 mines feeding a single mill in one of the places of the best infrastructure to develop projects in Canada, if not the world, right off the Trans-Canada Highway, power, natural gas, 2 towns of 8,000 and 5,000 people within 50 kilometers of the project, lots of skilled trades in the area. This is a great place to be working. And last but not least, our Techo project, moving forward with Pickle Crow, expecting some great high-grade drill results to be coming from our partners at Techo. This is the Bellevue Gold team and their next high-grade project, doing some great work. So in summary, we are moving forward with Springpole with size and scale. We're very well funded to move this project forward now. We've demonstrated an ability to unlock the value of our portfolio assets. We think that there's some real opportunities in the balance of our portfolio as well, which we'll keep moving forward on. All of these assets are in Canada, great mining jurisdiction, and I think that just has come to the fore more than not in the last few years as a really important criteria. There are still places you can find great value in the gold sector, and I think you have to dig through our portfolio to get there, but Springpole is trading at very attractive values. And we have a very experienced team in place to surface that value. So thank you very much. And if you'd like any more information, please find us on our website, www.firstmininggold.com. Thanks very much.